What if I told you the biggest opportunity in gold and silver in 2026 didn't come during the rise, it came during the crash? While most people panicked, sold at the bottom, or stayed frozen on the sidelines, entrepreneurs were positioning. Today, I'll break down why gold and silver crashed, why they came back, and how smart entrepreneurs turned volatility into opportunity. Let's get into it. 1. The crash. 2026 reality check. In early 2026, gold and silver did something unexpected. They fell. Hard. And for most people, this didn't make sense. Inflation fears were still around. Global uncertainty hadn't disappeared. So why did precious metals drop? Here's the entrepreneur's perspective. Capital doesn't move on fear alone. It moves toward returns. In 2026, money temporarily flowed into higher yield assets, stronger currencies, and short-term speculative plays. Gold and silver, being defensive assets, lost attention. Retail investors panicked. Headlines screamed, "Gold is dead." And social media declared the end of precious metals. But entrepreneurs know something most people forget. Price drops don't mean value disappears. They mean attention has shifted. 2. The comeback, when the story changed. Then, the narrative flipped. Quietly at first. Interest rates stabilized. Debt pressures resurfaced. Liquidity tightened. And suddenly, safety mattered again. Gold started climbing. Silver followed, faster and more aggressively. Why? Because silver isn't just money. It's industrial. It's energy. It's technology. And in 2026, demand didn't just return, it accelerated. What most people saw as a recovery, entrepreneurs recognized as capital rotation. Money didn't vanish during the crash. It waited. 3. The opportunity, entrepreneur mindset. Now here's the most important part. The opportunity wasn't about predicting the exact bottom. It was about positioning. Entrepreneurs didn't ask, "Is gold going lower?" They asked, "What does this volatility allow me to do?" Some opportunities entrepreneurs saw: acquiring undervalued assets, hedging business risk, diversifying outside traditional markets, and using precious metals as long-term insurance, not hype trades. They understood one rule: volatility transfers wealth from the impatient to the prepared. 4. The big lesson. This story isn't really about gold or silver. It's about mindset. Every market crash creates 3 types of people: those who panic, those who freeze, and those who prepare. Entrepreneurs fall into the third category. They don't chase headlines. They study cycles. They don't fear downturns. They build during them. Gold and silver in 2026 weren't a warning. They were a test. So here's the real question. Next time the market pulls back, will you see fear or will you see opportunity? If this helped you think like an entrepreneur, hit like, subscribe, and comment opportunity below. I'll see you in the next one.